So right here, this is my thought process, and I didn't take these trades. This is just potential setups that I saw based on how I personally use the algorithms. Because I know a lot of you guys are like, well, everybody charts differently. Yes, the algos are there, but a lot of algorithms look different, right? People draw the complex algos, people draw the macro algos. So there's many different variations of the charts. Yet we're all using the same strategy. So I'm simply just sharing my point of view, and maybe you guys see it the same way. Then you'll be able to adjust as necessary. The only trade before we start, the only trade that I was looking to take the entire day was this one right here, and I'm going to explain it why. And I ended up not even taking it just to get there to the point. It happened at 2:58 on a Friday. Not worth it, right? Um, so I'll explain everything else though. So let's start off. How do I go about drawing these algorithms? First, you got to get one thing straight, right? There's multiple sets of algorithms, right? We have the 30-minute algorithms, which are like the big macro context, which is right here. Okay, this is the daily. Let me guys show you guys on the 30. Even the daily, you could argue the daily has algorithms, but they take forever to form. So right here, this is the 30-minute context. Look, an algorithm, right? So the thing about the 30-minute algos is that they take a long time to form. Like for example, right? Here to here is one day, here to here is another day, here to here is another day. So it takes a total of 3 or 4 days for an algorithm to even break out, two for it to even form. Like right here, this is an entire algorithm itself, and then we start off the week around right here. And then this is the trade I was looking for on Friday. I'll show you guys the correlation, and then I'll go in depth on how I go about drawing the algos, what I look for setups. So right here, you guys can see this orange algorithm started forming. All right, we already identified it right here on Thursday and Wednesday, right? So by Friday, we're already looking for a potential setup based on the orange. We're either looking for a sort of bounce or a break, right? So right here, we saw the red algorithm form, and then this breaks orange, and then look, move to the downside, right? But now, how do we catch this? Because in reality, this red algorithm, you could argue it formed here, which is why I drew it, but then confirmation would need like this candle. So how would I go about catching this? Well, you guys can see right here. Let me change the color just for a second. So this orange algorithm right here is the exact same orange algorithm as this right here. Do you guys see the correlation? And then I'm just thickening this so you guys can see. And then this red algorithm is the same as this red algorithm. So what do we see right here? We see the break. You could maybe enter on the retest here. Now that I look back and see, this is probably a better entry, but the best price available is at this red algorithm. So you could have taken a lighter position because, again, usually, right? But you got to be careful because it's a 30-minute chart. But usually there's somewhat of a scatter plot middle algorithm, right? So by scatter plot, I mean it moves from like here to here, right? It's in the middle, but it kind of ranges like this. You guys can see this perfectly. It's like here, here. So you can take a position here using my theory the imaginary numbers, because when you look at the market, is that everything is there's different deviations, derivatives, right? I'm simply saying that the scatter plot theory is essentially just derivative imaginary, because it exists, right? It exists, but there's a use of discretion, up, down, up, down. So just not to make it too complicated, right? Just if you want to make it simple, it's just the middle algorithm that deviates from 20 to 30 cents like that. So you can take a position with your stops right here at orange. So reality, you could take a break and retest right here of this orange. But me personally, the way I was looking at it at the time, I was looking for a retest of the orange with confluence from the red, which was right here, and it did happen, right? I'm not completely full of shit. All right, we're not just fucking gurus here. It did happen. Look, penny perfect goes down for about $1 move. Now, the reason I didn't take it is because this is literally the last minute of the day. Excuse me. The last minute of the day right here on a Friday. 0 DTEs, it's like you're gonna have to buy a $3 lotto and then trade it into the after hours. And it's just, I don't necessarily think it's worth it. It's kind of a dumb play. If this was on like a Tuesday, Wednesday, and it happened more about right here, and you could buy the 0 DTEs with your broker, or even 1 DTE, risk the whole thing. The thing is, here's the thing. I'll explain about the 10 minutes trade. If you can't trade 0 DTEs because of your broker, like for example, I use Webull, if you can't trade the last 10 minutes using 0 DTEs, you're going to have to do a 1 DTE. But the problem about that is that the whole purpose of the 10 minutes, it's essentially a lotto. You have to risk the entire contract. And with 1 DTEs, well, by the end of the day, that's going to be a full dollar, maybe even more based on volatility. You could even get $1.50, and it's like you're going to risk an entire dollar to get what, a dollar move. Like it'd be a 1-to-1 risk to reward, damn near, right? So it wouldn't even be worth it. You could technically don't have to risk the entire contract because the stops are right here. The only reason in theory that you will risk the entire contract is because at 250 you get these candles that go wild. We didn't get it today. I guess we technically did right here. You guys can see this nasty wick. But at 250 you get some really nasty wicks and kind of a volatility candle, almost looks like a news candle. So I just personally wouldn't take this. If it happens at around like 255 maybe, but 259 on a Friday, just don't take the trade, call it a day. So that's the only trade I was looking for on SPY on Friday, because overall the market has just been choppy. Now let's get into the juicy parts of the video. How would I go about actually drawing the algos? I'll show you guys how I draw them here, and then how it does some confluence based on the 5 minute, how you can see it clearly. So I'm gonna go step by step on how to actually see the algorithms. Okay, we're gonna start with a top-down analysis, right? And you people can look at the timestamps that I won't put in. If you guys want to skip the entire first part of my trading, just get to the actual tutorial, fine, so be it. So what do we know if you guys were paying attention? Right here is the 30-minute chart. The 30-minute chart has algorithms. Now, what does this mean? It means price is moving in between the lines, the trend lines. Like I'm Tory fucking trades, bro. Okay, but look. Right here goes down. I'll show you the best example. This wasn't as clear, but this is very clear. So right here, pink builds liquidity. It's going down in this white. What happens again? Pink builds liquidity, goes down in white. Pink builds liquidity. We never tested, so you guys can see that the confluence right here, the 20-day moving average. By the time we break pink, in theory, it's either going to be breaking the 5-day or the 20-day. I want the 20-day because I'm cycling into my Roth, and that's going to be a perfect position to buy, and then we could just target the top of the Bollinger, or if it's trending down, we'll target the all-time high. No matter how long it takes us, I'll go into cycling trading, maybe another video. But it doesn't matter. You're always going to make money since it's a retirement account 60 years from now. Even if you do everything wrong, if you just hold till the new highs, you're going to make money. So right here, what does this look like? This orange, right? This red. Now we're going to have to go into a smaller time frame because you guys can see, well, what happened with these moves? We waited an entire week to get one move. We waited an entire day to get a move. We're waiting an entire 1 to 2 weeks to get this pink move, right? So if you're like swing trading or you're just kind of doing this here and there, then yes, you can trade just based off the 30-minute algo, go into the 5 to get a precise entry, and call it a day. But we don't want that. We want to make money every single day. So let's go deep into these. Sorry, I drank too much soda before this. Been fucking splurging on Coke Zeros. But basically, in theory, you can trade every single one of these candles, right? Every 1 candle to 2 candles is essentially an algorithm on the 5-minute chart. So what does this look like? This is Friday. 1, 2, 3, right? Each one of these candles is tradable on a micro context. You don't have to wait the entire day to get this move. This entire candle is $2. You can trade that. This entire candle is $3. You can trade that. So if we go on the 5-minute, well, what does this look like? For example, the first candle from 8:30 to first two candles to about 10 o'clock. It's about three candles. So one, two, three. This tiny chunk right here, do it with pink. This is just an estimate, but this tiny chunk right here, you guys can see it's pretty much the red algorithm. If we're being honest, I should have probably saw that, but I didn't at that time. Not with those three candles, at least. Again, the 30-minute chart trades, I feel like they're a lot more advanced. At least for me, I don't see it as quickly. I'm not good in deciphering it as quickly, but if you're more advanced, you probably would have saw this as red. So right here, what is this? I'll keep it pink so it makes sense. What is this right here? 1, 2, 3. Well, that's just this section right here. Let me show if I have some drawing tools right here so I can show you guys exactly. Here to here, this square right here is the equivalent of these three candles. So you guys see where I'm coming. So if you go smaller and smaller, you can trade these algorithms, right? So this right here is the same as this right here. Now, let's see what we're looking for then. Right here, this is a downtrend algo, right? When the price is moving downwards, it's bearish. Now, keep in mind, since the slope of this pink is not steep, it's technically the bulls controlling it on a macro context. But in the meantime, before we break out of this algo into this magenta to take these trades here, you can scalp to the downside. So picture it this way. Until we break this pink right here, there's no reason to go long at all. There's no reason to go long. Maybe you take a zombie here, right? But we're not going to go into that. We're just going to go into the basic trades. So how do we trade this, right? Because this is kind of blockish. Well, guess what? If there's a rectangle here, so this right here, we already said is this right here. Well, we can go even lower. So we already identified the pink algorithm here. Now let's go even lower. Ooh, the same rectangle within that pink is right here, right here. Let me show you guys. It's all going to make sense if it's not already making sense now. All this, and all this is the exact same thing. So we go even lower. We already discussed in this right here that, look, perfect example, pink down, pink down. The same theory exists on the 5-minute. We're going down in pink, but what do we have here? Blue, blue, down in orange, blue, down in orange, right? Realistically, there might be kind of an orange right here, right? So within the 5-minute algo, which is only 3 candles on the 30-minute algo, there's already like 2-3 potential setups. So how would I trade this? How would I chart this? We identify the pink right here. So until the pink breaks, we don't go long. We're only looking for shorts. What do we look for? I usually just let the first structure go by. If you trust your early candles enough within the first 15 minutes, then you can take the trade. I never take any trades that happen at exactly 9 o'clock because it's always a news candle or a volume candle. It's just not worth it. I rather wait for the structure about 45 minutes after this. So what did I see right here? And again, by Friday, I just didn't have really mental capital. I was more focused on charting to making content for the channel, right? So right here, blue is building liquidity. It breaks down in orange. Pay attention. What do we see now? Blue builds liquidity. It breaks down in orange, but the reason it goes down in this giant candle is, again, at 9 o'clock, there's a lot of volume that comes into the market, so it doesn't follow structure exactly, which is why I don't like to trade it if it happens exactly at 9. Well, what can we wait for then? Blue starts to build liquidity one last time. Would you look at that? Break, retest in orange, penny perfect to this level. Where is this level right here? We look on the 30-minute. Zoom out right here. That level is orange right here. Now, to be fair, it'd be an estimation of orange from Wednesday because it hasn't formed right here just yet, right? So it'd be kind of an estimation, but the point still stands. Break, right? Retest, protect on the momentum candle. How does this look like on the 5 minute? It's right here, right? This 5 minute candle is about two candles. Two candles on the 5 minute is the same as this. You protect with one good, like for example, once you enter, I would protect when you see a giant 5 minute candle, take all your profits, leave one runner if it wants to go even like lower. Like for example, it could target these pre-market lows, it could target the 5 day moving average. But for the most part, early in the morning, take most of your profits with that 5 minute candle, which is just like 3 to 5 1 minute candles, right? So that's that. So what would I look for now? Because again, at the time, this orange does not exist, right? This orange does not exist. And let's make it a little bit different so you guys don't get confused. Let's make it like a darker orange, right? Because these oranges like are the selling. Well, what am I looking for now? Same thing. We're looking for blue, and blue has to happen before pink breaks. Now you guys can see blue was never tested again within this pink algorithm. It was never tested again, and then by the time it breaks that pink algo, I would just leave it completely alone. Now, what can you do here? There's more trades that can happen within this magenta algorithm that forms. There's three ways you could have technically traded this, right? The first one is the 5 minute algo breaks, right? So pink breaks, and you just take the retest of this area. Now the thing is, at the time, this magenta wasn't really there. Magenta started forming kind of like after this candle on the 1 minute. It becomes more clear, which is why the ideal trade is this one right here. Maybe you take a lighter position here with an estimation. Again, trading is a lot of estimation, derivative I. It's up to discretion, and the better you get as a trader, the better your discretion is. So right here, pink breaks. Well, you just take the break of pink into the 5 minute. How do we enter on the 1 minute? Multiple ways. You can just take the straight break and retest around this area, but again, this doesn't really form too well. You could see pink happens again, right? Because what do we see right here? Pink breaks, goes up in magenta. Pink breaks, goes up in this kind of like magenta area. And again, if you look at the I theory, there is about a middle algo right here that kind of deviates like that. So that's why you always got to protect your trades. It's not because it's never going to go to the top right here of this magenta. It's because the middle deviates, and it can be some resistance or support depending on what side you're on. So that's why you always protect, and then you hope that your runners go to the top, which it kind of did. For the most part, it did, just not all the way. So pink goes up. You can wait for pink again, goes up. A lot of the times you don't have to fully wait for the pink. You can enter just on the bounce of this magenta. Like if you guys saw it right here in the 5 minute, you don't necessarily have to wait for the blue to break like in here. The reason you would wait for the blue to break here, it's because pink is so far away, and essentially your stops have to be pink unless you have blue and orange. So it's better just to do the blue and orange here. But when your entry is so close to the line right here, your stops are about 20 cents at most. You can just enter at the touch here and get a better position, better entry. You don't have to wait for the pink to break. You can just kind of enter right here and look, beautiful candle. This is a 5 minute candle. You protect and you make about enter right here at 13 cents right here. So this is about a 60, 70 cent move, if not more, with momentum. So that's more than enough. So then you would look right here. Well, what are we looking for next? Pretty simple, right? Pink is leading the way. At this point, once the main, you guys got to identify the main move, right? Which is the big volume candles. Once the main volume candle happens, more likely than not, if we touch this again, the magenta, we're not going to bounce fully. So you'd probably want to see a second structure with pink. If pink isn't enough liquidity, you're going to see a more thicker structure, a more shallow structure. Well, this yellow starts forming. We can identify it easier on the 5 minute chart. I hope you guys are keeping up with me. It's not too rocket science, right? And I'm not going all schizo ranting. I'm trying to keep it very professional, just so you guys can understand my thought process. Right here, yellow starts forming, and I'll explain why within this chop right here I start looking at like Meta and Apple. I'll show you guys the same thing. Let's see. So yellow starts forming right here. Until yellow breaks to the upside, we have nothing to do. Now, technically, right, and this is where your discretion as a trader has to really come in. Technically, blue and orange appear again. Blue breaks down in orange, blue breaks down in orange. But let me ask you this. If pink is already considered not steep enough, where you should probably scale down a bit if the market wants to go down in that blue and orange, this is clearly being controlled by the bulls. Even though we're technically going down, this right here is pretty much sideways action going to the downside, meaning that the bulls are controlling it. And what do we have that to prove with? Right here. This precision algorithm appears and it completely just blasts. Now, this is extremely hard to catch. We like to call these intern candles. They just press buttons and a bunch of volume comes in. I personally wouldn't take this. I'm not skilled enough to take this. If you're a breakout trader, you can take this, right? But I remember watching this live, and this is why I don't like taking breakouts. Watching this live, this went all the way to here, but then it went all the way back down here, meaning you have to endure a crazy amount of stop loss just to then it goes just for it to go back up after. That's why I don't like breakouts, because the retest is clear. If it retests, right, and it breaks as yellow, well, then you're invalidated. But on a break, it can break, come all the way down here, and then go back up, and you just kind of have to live with it. And I just don't think that's good R2R. That's why I don't take breaks. So how can we manage it if we miss this trade? Well, pretty simple. Since this broke out on a 5-minute algo, well, let's go ahead and draw this potential yellow algorithm, because at least now we know that pink wasn't enough liquidity to keep it going, and later in the day we need more liquidity. So maybe we have another pink. Pink technically forms right here again, because pink is this red right here. You guys can see even in real time, like I have this as a completely different algo because I wasn't able to identify this as the same pink. I kind of looked at it like this. We went up in yellow, so my theory at the time, I guys can show you, yes, the algos are penny perfect, but even my analysis isn't perfect. I drew yellow again because I wanted to structure building with the yellow liquidity, but instead pink form, but I wasn't really looking at it like that. So this is why I have this a completely different color, even though you could say these are pretty much the exact same algorithm. But at this point, I noticed that the 30-minute was heading down. And until we broke this yellow, I just wasn't comfortable taking another pink trade, especially this late in the day, which requires more liquidity. So that's why I had the yellow here. If this broke out of here, I would have missed calls. I would have missed the potential upside. And again, that's just to show you that my theory is not 100% correct all the time. I wanted this yellow. Yellow never happened. Pink appeared. I didn't even identify it in real time. What I saw was a downtrend to take right here, right? So we already went over this. This is just right here. So that's that. So you guys can see even in a sideways day, let me show you guys what I mean by sideways day. If you look at the daily chart, right? So you guys can see, oh, look at all those trades. So many trades, so many trades. Well, what did the day actually look like? How was the price action? Look at this candle. This was Friday. Look how ugly this candle is. We had a bunch of upside, nasty rejection, which is why my bias, I guess I never like to say bias. The market tells you it's bias. You don't have a bias as a human. The market tells you it's bias. We had a rejection right here, which is why I started looking at this, looking towards downside potential, and wanted the yellow here instead. So sometimes you got to glance at the daily when you feel kind of confused. It kind of tells you what the day is looking like. Overall, this is kind of a shit-ass day. The whole week has been complete shit. But even in a crappy day, there's just so much money to be made. Oh, sorry, that's the wrong chart. Even in a sideways day, with no clear direction, with a nasty rejection when we're trending up, there's just so much money to be made. Again, I didn't take any of these trades. The trade I wanted to take was here. But for you, look, one trade, two trades, three, four, five, six. Right? So there's many and these are just the ones I personally would take. But you guys can see, you guys could take the pink rejection here, right? These zombie trades off this orange. Like there's many ways to trade. This is just how I personally see the market, what I would have looked at. Now, what do I do between? Because between 10:22 and 1 o'clock, there's nothing to do. There's nothing to do. You're just sitting in a chop. You have your alerts at yellow. Well, this is when I switch to Apple and Meta. You guys can see you don't really have to chart the algos to extreme to that level because they tend to pick up more on the 5-minute institutional algos. So right here, just identify purple. Again, I did this on the 5-minute, but I'm going to show you guys on the 1-minute so it's easier to see. Identify the purple. Okay, we left purple. Now we're in this blue. And this is actually a very important lesson on Apple. Now we're in this blue. Orange breaks out in red. In theory, all you need is another orange and it breaks out in red. Now, it never broke out in red, and that's fine. It broke out of this blue and then just started chopping the rest of the day. Completely fucking useless. Now, the thing is, right? Why would you not actually take this? It's because Apple and Meta and some other tickers, they don't work on a strike every dollar or every 50 cents like SPY and SPX. They work at every dollar, every $2.50. Meaning that if you actually wanted to make money, you would need kind of a trend day today since we had so much upside. So we literally would need a full reversal. Why? Because let's say price continued like this, right? Price goes up, goes down here. Well, your next strike, unless you want to take something deep in the money, but then you deal with liquidity issues, it's not really worth the R to R. Unless you want something deep in the money and extremely expensive, you don't take this. You want the puts to be at 307.50, at $307.50. Well, that's not going to happen unless we get another orange here and another orange here. You know what I mean? Essentially completing the cup to this level. And until that happens, you're just not going to be able to go short because you're trading too out of the money. It's not going to make sense. You always want to target good strikes, which is why I like trading Apple and Meta in the middle of the chop, because it doesn't require too much mental bandwidth because the strikes are obvious, right? Like right here, it's just so obvious. Where would you want to short this? If blue rejects here with the orange and sells in the red, right here, it just never happened. So if it doesn't happen and it just breaks out here, well, so be it. Again, and then you wouldn't want to go long here because look how far away the 310 is, the next strike price. So that's why I like Apple and Meta. It's very obvious. This is the only trade I would have taken. Maybe if you saw this, you could have taken a strike here at 310 puts. But I personally just didn't see it at the time. I wanted more of a continuation like that. We didn't get it. Now we look at Meta. Meta's the same thing. It was, again, this was a choppier day on Friday. Right here, how would I have taken these trades? Maybe you take the rejection off pink since it's penny perfect on the 5-minute, right? You could take some puts right here to this 607.50. Or you could look at calls right here. The next strike price would be 610. So you see the yellow breaks for confirmation. The yellow again breaks in the purple with confirmation, right? You could target this 610 right here and you'd be deep in the money. This would have been a good trade. Again, by Friday, I lose most of my mental bandwidth, and I just had my alerts on SPY. I wanted the bigger move on SPY, which was this right here. It just took too long to work, right? This would have been the move of the day if it came a lot earlier, but on a Friday, again, it just takes too long. So how do I manage this? You start off the day trading SPY in the morning, right? And then the moment you notice this afternoon chop, usually comes between like 11 to 12, but this came a little early. Came around 10 to 1 to here. So between, you can even argue for the next like 3 or 4 hours, it's nothing but chop because we're in the middle of the 30-minute wedge. You can trade other tickers, Apple, Meta. I stay away from QQQ because the price action is like it's too similar. If SPY is chopping, more likely than not, QQQ is also chopping. So you can go ahead and trade other tickers, Tesla, Apple, Meta. I like Apple and Meta because the contracts are, They're not too expensive for my account size. Tesla is just way too expensive for me, at least. But if you can trade Tesla and love some violent IVs, then go ahead. Go ahead and trade Tesla. But even in the chop, let's say there's no setup on Apple, Meta, within the 10 to 2 o'clock chop, you could have taken these calls, and even if you didn't get a trade for the entire day on SPY, you could have taken the calls here and made some extra pocket change. And in this case, deep in the money, this would have been an easy 100% trade, if not more. So that's just my thought process, how I manage it. And everything's just correlated. You're basically trading algos within algos within algos. Bigger context plays. Let me show you guys 30-minute again. Macro context, there's like 1 or 2 plays per week. We got to go even lower. There's channel breaks on the 5-minute. So this is one algorithm to this algorithm. These are I would load up. When you look at 5-minute algos, load up. 30-minute algos, load up. If you're trading strictly 1-minute algos, take it with a grain of salt. There's a lot of noise. Scale down maybe. I'd risk 1 to 2%. If you want to risk 3% on the 5 or 30, I think you could do that as well. And then you just see algorithms within algorithms. So there's just pretty much multiple plays every day. And this goes even lower. Like if you're trading the 15-second chart, right? If you're trading like the ticker chart, right here, this entire algorithm, just for a second, pretend that this is a 5-minute algorithm, even though this is the 1-minute chart. Look, 1 breaks. 1, right? So if you're trading like the 15-second chart, you would see algorithms within algorithms within algorithms. It goes lower to the micro level of ticks. But again, 1 minute is already noisy enough. I would never trade anything less than the 1 minute. So that's just my thought process. Let me know what you guys think. I'm more of a intermediate type of trader, I would say, in my career. So I'm not at the normie beginner level where you guys think all this fucking ICT and all these fucking indicators work. Again, with indicators for a second, these are just averages. I don't trade based off these. These just tell me average prices for when I cycle trade and look at intraday, just overall trend. But you never trade off them, right? This is mostly meant for like cycle trading. And yeah, so in the intermediate phase that I would say that I'm able to see the more complex algorithms within the 5-minute algos. If you're a beginner, you don't even have to chart these little algorithms. You could literally just chart the pink, take it in magenta. Chart the yellow, take it in this green. Chart the red, which is pink. Chart the red, and then take it at the break of this orange, right? You could trade the more 5-minute algos. There's only like 1 or 2, 3 setups of those in the day. But they're a lot higher quality. They don't require as fast precision as the 1 minute. But once you get to more intermediate level like me, you can start micro analyzing and looking at algos within algos, essentially, right? And then once you get to a more advanced level, right? If you think this is hard enough, just wait, right? Watch Eric's free videos, right? He has like 800. Before you guys, you're a guru, you're trying to sell a course and affiliate link. Listen, if you're not willing to risk $100 to join a top tier program, then trading just isn't fucking for you. And we don't need people like you. You know what I mean? We don't need your money. What we want is talent that knows how to swim. It's a sink or swim environment. We don't need people fucking bitching and complaining about everything, okay? We don't fucking need that. And if you're going to join Eric's Discord, one, it's a lot more professional than me. If you like the leeway of me and my videos, go ahead and watch it. I'm schizo and I like ranting like Kanye West, and I just don't care, right? And I like to break down things at an intermediate level. Now, once you start getting the basics, once you start watching Eric's videos, again, 800 videos, if not more, thousands of hours, 15 to 30 minutes per video, completely free. So you guys want to complain that you're brokies and all this, all of his content is completely free for you to at least learn the basics. You can make money not even ever paying a cent, right? A cent to the Discord. If you guys aren't willing to watch 800 videos worth of content for free, yet you have the audacity to complain about my affiliate link in the description, it's like, I don't know what to tell you. I'm literally telling you, don't pay for the Discord. Don't use my link, right? Watch the videos completely for free, thousands of hours. It would literally take you a full year to watch his videos if you binge watch them. If you're not even willing to do it for free, then I don't know what to tell you, right? Now, if you did watch all of the free content and my content as well, and you still feel like you want to go more in depth with it, then you join the Discord and learn from the wizard himself. Okay? I'm just the messenger. I am not the wizard. Again, I look at this from an intermediate type level, I would say. Not a beginner, but intermediate. If you want to look at grand wizardry, like legit market witchcraft, you guys got to check out Eric. His analysis is just on a whole nother level. Like, if you think this is complicated coming from me, bro, I am telling you, as somebody with like a 170 IQ genius like me, is nothing in comparison to Wall Street level type legend as him. Enough glazing because you're glazing. No, I'm just being honest. Like, I gotta give credit where credit is due. Go check out his Discord or check out the free fucking videos if you're a brokey. Okay, or if you don't want any of that, just keep watching my videos. Again, I don't have nothing to sell to you. I only send you to my mentor because he can do it at a high level compared to me. There's no point of learning from me, like paying me to do it, at least for the time being. Maybe in the future, 5 to 10 years from now, I'll start my own thing. But until then, I'm gonna just send you guys to the Grand Wizard himself, Spy Day Trading on YouTube. So that's enough glaze. Let me know what you guys think about the analysis. This is just how I see the market. I know a lot of people kind of just draw lines like that, draw lines like that. I don't see the market that way. I need to see a penny perfect, or at least by scatter plot derivative I averages that we talked about. So if it's not that, I just don't see the market that way. I know a lot of guys, like, everybody's charts look different. But I'm always going to say my charts are the best because they make the most sense to me. Like, even if you look at Eric's charts, we have a lot of similar algos. Like, for example, the pink would be similar, maybe the yellow, the orange. But a lot of these individual algos right here, they're going to be a lot different. Even with me and Eric, with me and my other trader that's in the Discord, my friend in real life, with other traders in the Discord, everybody's chart looks different. It's kind of just, how does your pattern recognition help you, right? Because at the end of the day, this isn't a full mechanical strategy. There's a lot of discretion. I want to say it's like, I got an argument with the Discord. Not an argument, but a disagreement. Somebody said, no, this is like purely mechanical. Yes, there's some discretion. I think this is a heavy discretional strategy. Now, why do I say that? It's because, yes, the mechanical part of it is, I guess, enter puts on green candles, right? Counter slippage techniques. Don't enter puts at support or like resistance if it's calls, right? Like the basic support and resistance theory, right? So there's mechanical rules, risk 1 to 3% of your account, right? Rules like that are completely mechanical, right? Your take profit, your stop loss, mechanical levels. But with zero DTEs, there's a lot of momentum based things, there's a lot of nuance, there's the scatter plot I we talked about. I say it's like 60-40 discretion. At least the way I trade, I want to say that the algorithms, that's the thing. The whole strategy is that the algorithms are up to discretion. Because for the most part, you could argue that there's an algorithm like this pink. But then somebody could argue that they saw the pink more like that. Right? And they would technically be right. Because if they drew it like this, look, rejects here, goes down, breaks it. Right? But then here, if you see it right here, it breaks it here as well. So it's up to interpretation and discretion and nuance, and that's called building your edge in the market. And this is a very high level strategy, I would say. It's not crazy. It's just a lot of pattern recognition, and you're gonna start seeing the patterns better and better. You got to keep training your eyes. Right, so nobody's algos look the same, even with the strategy. Nobody takes the same trades. Nobody's algos look the same. Again, there's similarities. Like, for the most part, people would be able to draw the pink, the blue maybe, this magenta, but maybe their yellow looks different. Maybe their red looks different. Maybe this green right here looks different, right? So there's a lot of similarities in the charts, but everybody has a different eye for the market. For example, I'll show you guys the best example right here. My 30-minute chart looks nothing like Eric's. Like, literally nothing at all. He has a lot of lines going like this. And here's the thing. He seems to be very accurate with them. But to me, I just don't see it. Like, I'll have lines like this, lines like that. I just don't see it. For example, the 30-minute chart right here, I see it like this. I see it like this. He might see it like this. And if you're a beginner or you're looking at his Discord, do not copy my chart. Learn directly from him. because you're going to be able to see the charts more like him. And for somebody learning, it's better to see it as the actual mentor. Me, I'm having some discretion right here, which is why I have it like this. This orange instead of that pink. Again, up to interpretation. I said it a million times already. It's getting redundant. Look at the free content. Join the Discord. Use my link if you want to help me make money. Don't use my link if you think I'm scamming you. Don't join at all if you think the entire thing's a scam. Don't even watch the videos if you think the strategy's full of shit. At the end of the day, if you're not willing to take risk, I don't know what to tell you. If you're not even willing to take a $98 risk, it's like, bro, I lost thousands before I made a penny. You know what I mean? It's like you're gonna cry about $98. Like, fuck, go fucking DoorDash or something. like, come on, bro. 5 hours of DoorDash, you're making the $98, and then you can pay for it. It's like, come on, one DoorDash a week, shift a week, and you can pay for the Discord. I don't know what you want me to tell you. I don't know what you want me to tell you. As a matter of fact, I'm gonna grind even harder. I'm gonna go ahead and wrap up this video, but I'm gonna go ahead and do a whole video on how I plan on cycle trading, because grind don't stop. So, peace. I hope this helped. I know I talk and teach in a very Kanye West rantful matter. I'm not professional. I'm more like Jordan fucking Belfort, and I'm very, like, I may or may not have a secretary underneath my desk right now just slopping me. You know what I mean? That's how I want to trade. I want to trade like the Wolf on Wall Street. But if you look at Eric's Discord, it's completely more professional. Yeah, I'm a bit of an entertainer. You guys can see in my other content, my gaming channel too. I'm more of an entertainer, but that also translates into market theory, right? I'm like Jordan fucking Belfort, bro. Give me the lewds, give me the horrors. We're just going crazy. We're going crazy. We're gonna make money. We're gonna stay disciplined. And yeah, I hope that this helped. I hope that the whole market's chopping during midday. You can start trading other tickers at a lighter level, clear strike prices, algos within algos. That's the best I can explain it. I'll do other videos if I think, but I picked Friday because it was like a really easy day to explain. So, like and subscribe, y'all. Do everything I told you to do, or don't. At the end of the day, I can't make you do anything. You can take the horse to drink the water, but you can't fucking make it drink. You can take the girl on a date, but you can't make her fuck. You gotta choose that. You gotta choose that. Now, with me, they always choose the correct answer, right? So, enough yapping, enough schizo yapping, right, y'all.